The stock market was absolutely punished today, erasing gains through this rally that we have seen over the past several days. This is important because of the Federal Reserve and what they are about to do. I'm going to show you all the details. I will get into the reports of the CPI, inflation, and looking at each and every component. Let's begin. Here we have the Dow tumbling 1,200 points for its worst day since June 2020 after hot inflation report. The expectation here at this point was that inflation would subside. That was peak inflation, and now each report would be less and less and less. Of course, remember, this is a measurement of year over year or month over month. And when we look at this, we are supposed to see a decline occurring, but that didn't happen. Let's break it down further. Here we have inflation rose 0.1% in August, even with the sharp drop in gas prices. So while energy prices declined, we had other things like housing that increased quite a bit. So you could look at the numbers there, and all I'm just trying to show you is that you have one component up, you have one component down, but in general, the inflation is still too hot. The CPI report was an unequivocal negative for equity markets. The hotter than expected report means that we will get a continued pressure from the Fed policy via rate hikes. That's the number one thing. And the number two is that it also pushes back any, quote, Fed pivot that the markets were hopeful for in the near term. So this is what I want to talk about here, these two aspects, the Fed pivot as well as the Federal Reserve's actions. We had seen previously that the Federal Reserve started to increase interest rates at 25 basis points. Then inflation picked up even further and they said, wait a minute, maybe it's not transitory after all. Okay, we know that story. So then they increased by 75 basis points. The following month did it again. And the expectation is now not only that the Federal Reserve would increase by 75 basis points, but some are starting to suggest 100 basis points or 1%. Now that would be quite significant. That would be a shock to the markets, but also, in my opinion, more importantly, to businesses, because they're saying, oh my goodness, if they're going to start increase by these high numbers of 1%, 75 basis points being considered low, then we've got a problem here because our borrowing costs are going up substantially. This is a big concern for the corporations, especially that took on way too much debt. Remember, expansion takes place not with money, not with cash, but with debt, because debt is the system that they've decided to use, taking out loans. Remember, when they're doing stock buybacks, they're doing so with debt. All of this system, the whole thing is running off of debt. People borrow out of their own assets, whether that's stocks, whether that's real estate. They borrow from it. When they borrow, they add that at an interest rate, which has increased significantly over the last while. So now they're not going to borrow. Why were they borrowing? Because they wanted to spend. You see? And it's a cycle. So we need to pay close attention to that. And of course, the Fed pivot, they believed, the markets for a little while, they were saying, yeah, I know inflation's hot, and I know the Federal Reserve has already increased way beyond what I thought they would, but they're going to reverse in the near future, and that has not happened. Look here, there's more. You can see it on a chart form. The green bars, that's just showing you month over month, and then the blue line is just the overall year over year. Yes, we are down from its peak, but it is still high year over year at 8.3%. This guy right here, he works for the Wall Street Journal. And it's said that they give him information to kind of leak out there from the Federal Reserve. I don't know how true that is, but it's interesting to say the least. Another large jump in underlying prices squashes hopes for a slower pace of interest rate increases. The August CPI could lead more officials to project somewhat higher rates relative to previous expectations in next week's quarterly projections. What he's saying here, along with the article written about that, is the fact that they are not going to be able to do 50 basis points. It was kind of what they were hoping for. 75 is looking very likely now, and 100 basis points suddenly becomes a possibility. Look, further in the article, they're just saying the acceleration in inflation last month clinches the case for the Federal Reserve to lift interest rates by at least, this is what his writing is, at least 0.75% at its meeting next week, and raises the prospect of hefty increases continuing in coming months. So we don't know what's going to happen, and I don't know if this is the case where they let him say something so to see how the market reacts to it, because they don't want an official Fed member to say something like this very specific. And obviously, very obviously, the markets didn't like it. And I'm going to look very carefully at what the different businesses have said. Small businesses right now, I'll show you the stat in just a second, are saying we're halting hiring. We're not going to hire anymore. So what do you think that does to the economy overall? Of course, there is a slowdown. Demand starts to wane, you get some problems. Let's look further. BLS says that inflation in the price of food is the highest since 1979. Of course, food, you can't get around it, okay? You can grow a garden, you can do things on your own in this way, and I've been telling people for 2 years, like almost every day, that you need something to do with your food, whether it's having the storable food. Come on, please, if anybody has been subscribed to me for the last 2 years, how many times was I telling people, get a whole bunch of rice, beans, pasta, and other non-perishable goods, the stuff you're going to eat anyway, and just keep a large supply of that due to shortages, due to price increases. I said that over and over and over again. And please, if you don't mind, put it in the comment section below, just so I know that I'm not saying this to a brick wall here or talking to my camera alone. I gotta know that this is something that I've been talking about for a while, and now we're seeing, yeah, the food inflation is picking up. The food 2 years later, way after the vast majority of those analysts, the YouTubers out there telling you, you gotta ignore all that nonsense, inflation's transitory. Are they gonna apologize? No? Okay. Anyway, just showing you that food prices have increased. And we look here, markets were jolted by a nasty CPI print this morning and are responding in kind. Misses on both headline and core are disappointing, as this bout of inflation proves to be anything but transitory. Oh, yes, that's right, of course. Transitory, I love that one. Now, the bond king, Jeffrey Gundlach, warns Fed may overdo rate hike to tackle inflation. And so what he actually suggested was pretty funny, because he is saying, I think you should do 25 basis points instead of 75 basis points. Don't spook the markets anymore. At the same time, he said that he believes the markets could go as low as 3,000, the S&P 500. Whether or not that happens, I don't know. But essentially what he's trying to say here, and I agree with the fact that they're always behind. The Federal Reserve is always behind. You know, when they were saying it's all transitory, it was so far into it, and basically everybody was saying, my goodness, what are you doing? Stop it. Stop printing $120 billion a month for nothing. Why are you buying, tens of billions of mortgage-backed securities every single month when the prices of homes are going straight up? So that's what he's saying. He was saying that all along. And now he's kind of saying, you got to slow down a little bit here, because you don't know what's going to happen. It's always going to be in hindsight. It's always going to be in the rear view mirror. So that's kind of what he's pointing out. I just want to show that to you because, he definitely says a lot of right things. That's for sure. At least he points in the right direction. Phoenix inflation at a record 13% shows divergence among cities. So you look at some of these other cities and what they've been doing, the housing costs or shelter costs have increased dramatically. But also at the same time, you might be experiencing inflation in other categories as well. You might be living in Phoenix and suddenly your power prices have increased dramatically. That's just the way it goes, right? You could live in one place and you're saying, man, inflation's not really that bad. Food shortages are non-existent here. And you could be living in another place and say, that's the complete opposite factor. Let me show you these few charts here. You can see this one is showing us shelter and rent inflation year-over-year change. That kind of looks like a big spike. This chart goes all the way back to 1990, and you could see where it's been. I mean, there's always going to be fluctuations, but this has been truly extreme, to say the least. Health insurance CPI. Hey, that's fantastic. That helps the economy, right? Well, unfortunately, it's the same health care you're getting, the same health insurance you're getting, and yet the prices have increased dramatically. And by the way, they've been going up all the time, but this has been truly an extreme rise, and that's never a good thing because people are going to forego their different types of insurance. They're going to forego surgery if they needed it, or all these different things that will ultimately hurt a lot of people, potentially. This is just the actual real earnings, so people's real earnings. So when you factor in inflation, this has shown us that for the past 17 months in a row that we have seen people actually losing out month after month after month after month due to inflationary forces. Then there's this, comparison in between what's happening now and what happened in 2008. Is today the same thing as 2008 and 2009? Absolutely not. And I don't like when people make these suggestions that I'm saying it's the same thing. Absolutely not. It isn't the same thing. And it's not the same thing as 1929. It's not the same thing as 1987 or 2000 or anything. It's its own. But you do get the same sort of vibe in some cases. High inflation, you get oil shocks, you get geopolitical events, all these different things. They've come up before, but the whole mix of it is creating its own unique scenario. So what happens on the other end, we can only speculate. But I know something is for certain, that the average person is not going to be able to deal with all this inflation, that the average person is going to be burdened by it all. Okay, let's talk more about that in a second here. Looking at this, you will see that they are now, come on. The army suggests food stamps for soldiers battling inflation. Hey guys, here's some food stamps. What is this all about? They have no ability to resolve anything ever, and there's just more big government. That's the solution. We got to figure out what's actually happening. If there is a food scenario that you think you're going to be concerned about, I don't know, maybe prices increasing by 25% through this period. I think the last year, 25%. It's so extreme. So what can you do? Number one, you got to grow a garden. You got to grow food indoors if you can. We're getting into the colder temperatures. Have you seen the YouTube channel 1 Yard Revolution? 1 Yard Revolution has been growing, in a relatively normal sized backyard through the winter in Chicago. If you can do it in Chicago, you can do it in many different places. That's one thing. You can get storable food, the pastas, the rice, the beans, these type of things that will last a long period of time. So you buy today. If you think it's going to be more in 6 months from now, what are you waiting for? Why don't you get it today if you can? At least some products that you can get today so that you don't have to pay more tomorrow. Stuff that you're going to buy anyway. You don't have to get that freeze-dried astronaut food. I'm not saying that. I'm saying that you got to get something that you're going to eat anyway that will actually be stored safely, securely. You keep that there. You got to have your own situation in order financially. People are worried about getting I need to pick the bottom of the stock market. I need to pick the bottom. Why don't you worry about the actual scenario in front of you? Maybe you're going to lose your job. You don't even know what's happening here, and you're already saying, I need to pick the stock market bottom. Please, people, we don't need to be worried about the exact bottom. For most people, that's just not the case. Don't worry about that so much. Worry about the preparedness aspects and let the other things fall into place. I hope this message was beneficial to you. If it was, you've got to subscribe to the channel here. Hopefully, you will become one of the 282,000. I'll see you on the next one. Take care.